All right, go ahead.
I'm going to call it the Kung Pao Dao.
The FX Morning Mayhem podcast is an essential listen for currency traders. Each episode covers a curated watch list of key currency pairs alongside insightful market observations. It highlights crucial daily news events that could influence the market, ensuring traders are well informed. Additionally, the podcast offers valuable trading strategy tips catering to both new and experienced traders in the Forex market. This podcast is for educational purposes only. None of this info should be construed as investment advice. To see the trades called out live for free on our Slack channel, click the link in the description or scan the QR code to join the trade faction. If you find this podcast valuable, please follow and share with a friend. And now, on with the show. Good morning, everyone. It's Wednesday, February 19th, 2025, and you're listening to FX Morning Mayhem. It's time for the daily market briefing. In today's headlines, markets experienced negative sentiment as Ukrainian President Zelensky expressed frustration over his exclusion from US-Russian peace talks, causing equities to reach new lows. The USD strengthened slightly, while the NZD led gains following the Reserve Bank of New Zealand's decision to cut interest rates. The GBP remained stable amid mixed inflation data. Crude oil prices increased and aluminium prices spiked due to the EU's 16th sanctions package on Russia. Gilts underperformed following UK CPI data, while US Treasuries awaited 20-year supply and FOMC minutes. Bunds were affected by hawkish comments from ECB's Schnabel. Upcoming events include the release of FOMC minutes, comments from Fed's Jefferson, US Treasury supply, and earnings reports from various companies. Stay tuned for a currency market update with Bill and Dave up next. Thanks for listening to FX Morning Mayhem podcast. Don't forget to subscribe and leave us a review if you found this helpful.
Okie dokie. So let's start with the currency pairs. Here is the Aussie New Zealand dollar, and we are in a long wave phase, so we're looking for longs. We are in the zone, so this one's a good one, boys and girls. We want to look for a sweet spot to form right there. By the way, I did a back test on the strategy where you use the 2 times the ATR rule for your profit target and your stop loss.
Yeah,
And it has about a 90% success rate, which is crazy. So
nice.
9 out of 10 times, if you do that, you will probably win. So that's if you want a super conservative, 2 times the ATR as your profit target and your stop loss. So that's super, super conservative. The only caveat there is you're only going to make, what is it? The ATR here is 3 pips. So
Yeah,
you have to leverage up really huge so that 3 pips is a lot of money. So that's the only, I got you on that one. But that's pretty cool if you can have that high of a success. I'll take 9 out of 10 any day, even if
right.
I'm only making 3 to 5 pips. So that's the scoop on that one. The other strategy where you use either the most recent low or high, your stop loss, and then whatever that spread is, let's say that's 10 pips, that would be your profit target. So you do a 1-to-1 ratio on that. That has about a 49%, 48% success rate. So that's not quite as good, but
Gotcha.
way more pips. So you would leverage down on that. You would do smaller size. Anyway, that's your little trading tip for the day, boys and girls. Aussie US dollar in a long wave phase, and we're in the zone. So we are waiting for a sweet spot to set up here. Euro Canadian dollar, downtrend, looking for shorts in the zone, waiting for a sweet spot to form. Pound Canadian dollar, nothing. New Zealand, US dollar uptrend, looking for longs in the zone, waiting for a sweet spot there. And Singapore dollar chief uptrend, looking for longs in the zone, waiting for a sweet spot. Downtrend, blah, 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 looking for a sweet spot. And nothing going on there. The reason why so many of these are in limbo is because we're supposed to release the Fed minutes this afternoon.
Yeah.
That's why a lot of this stuff is just on the bubble here and not doing anything. So, here's what I wanted to talk about today for the market insights section. How money follows a high rate of return.
Okay.
Okay. You know how if the bonds are making a better interest rate than you're making on equities, people move money back and forth and all that kind of good stuff.
Yeah.
There's this phenomenon going on that I wasn't even aware of, and I just found out earlier today. Because of the disparity in interest rates between us and China's interest rate is roughly about 3.1%, and I believe the US is five and a quarter. So what's happening is the Chinese people are shipping their money over to the US because they get a better rate of return. Makes sense, right?
Yeah.
So that outflow of foreign exchange capital is about 75 billion dollars. And the experts predict that this is just going to continue because of this interest rate difference between the two countries. But the most interesting tidbit of information out of all this is that there are many people that theorize that the jump in Bitcoin and the moves in the Dow are directly correlated with these sort of influxes of cash from China. The Dow goes up and the value of Bitcoin goes up, and they're saying it jumps over 100% in 4 months. Oh,
Really?
I've come up with a name for this phenomenon since nobody came up with it, and I wanted to get your opinion.
All right, go ahead.
I'm going to call it the Kung Pao Dow. What do you think? So,
That's fantastic.
all right, cool. That's all I got for today, Dave.
All
So,
right.
over and out. Have a good one. Good luck trading.